The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 139. You get the NASDAQ flat. S&Ps are up 6. We have gold down $7.50 at $12.65. Platinum is down 23 bucks. They're slamming platinum. That's $9.77. Copper is up big. It's up almost 10 pennies at $2.55 a pound. Light sweet crude's off 66 cents, 44.61. Notes and bonds, they're getting toasted and roasted once again. You get the notes down 18 ticks, 127.15. 30-year bond off 20 ticks, 156.10. King dollar up 466 at 98.99. And bottom line is that this market reached for the highs, and the NASDAQ and the S&Ps couldn't handle it. The Dow's over them.
Yeah, I mean, I think you were flying around, but the NASDAQ, you might have said it was flat, but that's down like, I think, 0.5%, right? I mean, just looking 28 points. Is that what?
Well, the NDX 100 is.
Oh, okay.
And yeah, that's the weak link. The NDX has been the weak link, folks. Yesterday, as the market was just rocketing, the NDX still couldn't get any traction behind it, which is pretty wild. Let's go over to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, 12 to 1 Eastern Standard Time. Kevin and Scott have a great show. You want to understand options upside down, check it out. You can get it right on your cell phone. You go to TFNN.com, hit Tiger TV. You're going to get a great education inside the option market. And the way the volatility is out here, folks, you want to find risk.
Yes.
Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody doing?
Hey, we got to trade in this market, man. Big time.
How about these bonds and these yields and these bank stocks? Amazing.
Yeah.
These things are skyrocketing.
The bank stocks broke out in an extraordinary way, no doubt about it. The bonds get toasted. I think what's going to be interesting here is watching, the market wasn't paying attention to the bonds at all yesterday. It's like, oh, really?
Right, they kind of snuck up on them. You're exactly right.
Yeah, and I suspect, these rates going up that quick, not that they're high, but, for 36 hours, they put some hurt inside bond funds and inside the bond market itself.
Right, and that and the dollar, combined with the dollar, eventually that's going to be a little bit of a headwind on these stocks.
Right.
So they're going to run into some resistance up here. If interest rates keep going higher, and of course, if we're looking at an interest rate hike in December, things are going to get a little dicey up here. That's for sure. It's going to be a two-way trade, definitely.
Yeah, and hey, that's a good scene. That's the other side of it, right? I mean, that's
Tom, it's the way we make our living, right? Speculation.
A two-way market is a good market,
for sure.
It's the best market. That's right.
Yeah.
Exactly.
Wide consolidations, folks, are a good scene. You know what the amazing part when I always see whether it's highs or lows, Kevin, it's like, how the heck does the market know it goes up to this high, like the NASDAQ, the S&P? I mean, it's like a level, and it's been up here for like a year and a half. Well, the S&P's been up here for a year and a half, and it can't seem to make it. The NASDAQ, used to be the strongest, and then all of a sudden now it can't make it, and the Dow decided to flip everyone around and say, hey, I'm going to a new high. It's like, wow.
Yeah, this is really, you're right, Tom. This NASDAQ move, right now it's down 30. That's a counter trend. I mean, that's really the story of the day today. How it's going the complete opposite direction.
And it was surprising yesterday. The Qs just could not get going yesterday.
Well, you know what? It's got to be sector related, don't you think? It's got to be. I mean, I'm not an expert on what makes up the NASDAQ, but I imagine it's got to be healthcare, right? Because they killed healthcare yesterday. And Scott and I were going through the individual sectors, right?
Yes.
And what they were buying and what they were selling, and healthcare was definitely getting creamed.
Yeah.
I imagine if we dive into it more, we'll find some other sectors that are in there that are getting hurt.
Yeah, well, today they're killing. So check it out. Today it's Netflix, Facebook, and Amazon that's croaking it.
Oh, wow.
Yeah,
Really?
you get Netflix is down $5, Facebook is down $4, and Amazon is down 25.
Wow. So they're killing the new economy.
They're killing the new economy, man. What's wrong with them?
I mean, really, that is crazy.
Yep.
Of all these things that you're going to pick to hit in this market, it's really those three things that are making up, in my opinion, the millennial economy, right?
Oh, listen.
Sure.
Tommy and I talk about it all the time. We're always on Amazon ordering.
Yeah, I mean, just fundamentally,
Yeah.
you know, you look at order. You know, we spend money marketing on Facebook, right?
Yeah.
Or we
Big time.
spend all our shopping money on Amazon.
Yeah.
You know,
Yeah.
we have plenty of Apple products. We both belong to Netflix, right across the board.
And that's not going to change.
No.
So that's pretty funny, actually.
Yeah, we'll see.
Someone asked me the other day who's not involved in Facebook, and they say, why is Facebook so popular? I go, how about 1 billion people?
Yes.
Yeah.
1 billion.
Right.
You know?
I mean, Facebook is like its own little version of the internet. I say
It
it
is.
really is. It's
It
like, can
is.
you imagine if you just like started the internet and you owned it all? I mean, Facebook is what the internet was only like a few years ago, probably in its entirety.
even bigger.
In its entirety,
Yeah,
you know. So
right.
they do, and then that's just going to grow. Where you know, ESPN has their own Facebook page. It's almost akin to their website, but Facebook
Right.
owns it, right? I mean,
Right.
yeah.
Futures today, guys. It's all about futures on Thursday.
Right here. 12 o'clock, folks. TFNN.com. Kevin, have a great one, safe one. We look forward to the show.
Always a pleasure, guys. Have a great one.
Thank you. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 124. You get the NASDAQ down 18. S&Ps are off 44. See that now? The NASDAQ's down. They, you know what's amazing here, folks, and I was just saying to Tommy during the break, when you come up to highs like this, it's amazing that, you know, we were talking with Kevin, it's like, okay, you test the high, you give it up. And after a day like yesterday, you'd think that you could follow through, you could blow through the whole deal. Well, guess what? The market wanted to go higher, used a huge amount of energy to go higher. You know, now we'll see where this thing's shaking out. To me, it just rang the bell. So we'll see the type of euphoria.
It's remarkable. It's just gangbusters to the positive side. You know, the VIX is low. There's complacency, and it seems like there should be more risk priced in.
Well, the bond market is screaming. Now, you know, the rates, that's a quick move, man.
I was just even saying to you during the break, I mean, something to consider, those trade agreements when they come up. I mean, that alone is just going to provide, and it doesn't mean that, you know, they're not going to be able to crush the earnings and do well, but there's going to be moments where that stuff kind of is like out there and getting talked about, and things are talked about what they'll be changed, and I just see those being scary moments for the market that it isn't getting priced in maybe accurately
it's not.
right
well,
now.
Well, particularly because, okay, so let's go.
Wait. There we go.
Let's go look at the Dow Industrial. So, and those are going to be the big Dow companies too. So because they're national companies,
you know, and it would be, you know, it would be like the S&P 500, right? You know, you're looking at the big multinational, right?
So the leader out here is J.P. Morgan today. That's up $3.
Now again, that's banking, though, right? I totally get why that's going up, gangbusters for sure.
Home Depot's up 2.5%.
Who knows? Maybe infrastructure.
That's.
I'm just, you know, I can see them being. There's going to be huge winners and losers, right?
The market is pricing in that hard assets are going to be worth more money.
Okay.
You know, now the divergence on that though is if those rates go up too much, hard assets won't be worth more money. You know what I mean?
Yes.
It's going to be. What the market's saying right now is that the hard asset is going to go up quicker than the interest rate structure. Caterpillar's up 2.5%. Pfizer's up 2.5%. Taken away from it, Procter & Gamble's down 3.8%. Now there's the trade agreement right there.
Yep.
Coca-Cola's down.
Procter & Gamble, what are they? They have so many different items.
They sell in every country. Every country.
And I think they go. Procter & Gamble, is that where they have the food lineups too? Where you're talking about like Velveeta type, or is it
Oh yeah.
You know, there's, I mean, just complete.
I believe Procter & Gamble. I mean, it's like thousands and thousands and thousands.
That's what consumer products in countries throughout the world. Right.
Inside
you know, if they come out and they say NAFTA is ending on day one or something like that, which nobody said, but man, there's going to be discussions about it, and Procter & Gamble's going to face some scrutiny in terms of being able to navigate that if trade agreements have to change, you get renegotiated.
Right. No, there's no doubt.
Yeah.
Inside the NDX 100, you have Norwegian Cruise Lines is up 6%.
Is everyone just going to go on a vacation?
That was down yesterday, wicked. Bed Bath & Beyond is down 5%. Is up 5%, sorry. You got Seagate Technologies up 3.4%, and you got Comcast up 3.3%. Now, these are the numbers taking it down. You get NetEase. I think that's NetEase.
Yes.
Yeah, it is. NetEase down 5.5% or $14. Amazon's down 4 1/3% or $33. Netflix is down 4.2, $5, and Mondelez is down 3.8, which is $1.72. Pretty intense, man.
Yeah.
And so the kicker out here, you know, looking at this today is that the S&P and the NASDAQ have already failed. The real key is going to be, does the Dow fail with it? We get natural gas numbers coming up, don't we?
We do. We can take a look.
Okay, so let's take a look. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. Defined risk is where it's at. And
oh, man, right?
Excuse me.
Commodities, currencies, indices across the board for the foreseeable future.
Yes.
So right now we have natural gas. The inventory numbers come out at 10:30 on Thursday.
Okay.
Natural gas is trading at 260. What's going to be nice is that this is lining up basically perfectly for where the 11 a.m. spreads happen to fall.
Oh, good.
So there's a 260 to a 280 and a 260 to a 240 on the negative side.
Okay.
Which is pretty nice. So you'd have 20 cents of movement, profit potential.
Yeah.
Am I seeing that right? Yeah, I guess maybe this is because it's slightly away. There's no bid. We'll have to wait. Maybe it just got executed and they need to refresh it.
Okay. And I get 5.
I'm just not sure. So on the upside, it's going to cost you 18.
Yeah.
For the 182.
Look at that.
Yeah.
And I can't sell it. Well, I could sell it, but
there's no active bid.
Right.
I wonder why that comes up like that.
It's 260.
And it's trading at 261. So you're barely over. There should. Am I right? Am I getting lost? I think I'm right. Sometimes that just might not have an active bid right now. But that doesn't
That's
make
unusual,
sense.
though,
No,
right?
I know.
Yeah.
Yeah, I'm going back to the den. Maybe
they can straighten us out.
Yeah, I'm not sure. Because in theory, right, it should be pretty close to maybe $10 or so, you know, where you're paying $20 in premium, etc. And as we're saying, that this is getting even further out of the money, so I don't think that might populate if that's the reason why, but I'm not sure. Natural gas is a little bit tougher for me to gauge than oil.
So let's go to
see what other spreads they have.
Yeah.
Sure. The dailies.
Okay, so if we look at a daily,
let me just check in here as well to see if any of them line up exactly.
What we're trying to do, folks, is we're trying to get one that's close so we can trade both sides.
Yeah,
of
I
it.
wanted to see if 260 fell into it. Now, there's active bid offers across the board here. I'm not sure why that one doesn't have an active bid offer. But it's not going to be as ideal. I mean, we'll give it, so, you know, if you really thought it had market potential, this one only begins at 270, so you need a huge pop before you get anything.
Yeah.
But, you know, you're talking about for the day, you're only paying 270, basically 2709. But guess what? It's trading at 262.
Right.
So that's huge premium. You know, that's not ideal.
Yeah.
And if you drop down here, whoops, you'd be buying this one, but guess what? You have 15 cents in premium, in value, in intrinsic value. So you're paying the 150, which is your 15 cents in intrinsic value, plus like the 23 cents in premium. So these don't line up as well when you have to, and you know, just understand it, right? It's when you have to put up a lot of intrinsic value.
Right.
Because you should, because if it expires where it's at, you're going to get that back.
Right.
But if you're trying to do a highly leveraged, low-risk, high-reward trade, that's really tough to do when you have to pay for all this value built into the options. You want to pay for basically just premium.
Exactly.
You know, and guess what? That's why we want to do it at 11 a.m. because we don't just want to pay for premium. We're going to pay for like a half hour of premium.
Right.
And that's it.
I want to pay for the news report.
That's
That's what I'm really paying for.
And in this one, you're paying for not only that, you're paying for the end of the day, which really you're not trading for because you're not anticipating heavy volatility after a half hour of the news. You're just playing for that volatile spike. Yeah.
So let's bring up the Bloomberg just for a second.
Oh. There we go.
Beautiful. Look at this market. Give it up.
Yeah.
Unreal. See ya. Don't want to be ya. Market's done. Toast. Get the marshmallows out. Get the peanut butter and jelly out, folks. Dow Industrials right now up 100. You get the NASDAQ down 41. S&Ps are off 1.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at this natural gas. So first off, let's see what they did here. So
sure, I'm just minimizing a couple things. I'm going to jump back to the Bloomberg. I know, let's see what we. Do you want to go to the main screen maybe, or the?
Sure. Let's see.
Because we'll walk through as you're doing this. I'll tell them we went to. I said, what about the 12 o'clock, which we hadn't looked at.
Right.
Spreads, and the 12 o'clock spreads had the same 260 to 280 and 260 to 240. And we got in for about $35 combined. You got a couple contracts. So it was about $24, which is 2.4 pennies, you could call it, on one side.
Okay.
1.1. And here we go. What do we got? Looked like stockpiles rose 54 billion cubic feet, and there was an estimate of 51.
Okay, so they rose more.
Yep.
Right.
You got inventories rising, but 54 looks like the top line number. Natural gas supplies gained. Even the Bloomberg user survey was 51 billion cubic feet. Let's jump back and take a peek. Okay, so we're kind of 5 ticks away from 260, and unfortunately, 260 is going to be your max loss because that's the pivot point of each one.
Okay.
But we'll see what happens.
Yeah, there's not much.
These are. Okay, yeah, I just wanted to make sure I was looking at the right thing. So, yeah, you have 2 contracts on each side.
Oh, the cool thing is I have 12 o'clock ones this time,
too. Right,
yeah,
yes.
right. Okay.
You know, which is for $35 combined, that's 3.5 pennies. So you're looking at, basically, to put it on the graph, about 206.35 up here. You'd start to have profit to the upside, or the same thing at about, like down here. So you need some movement. But you have an hour and a half. And we know how those can react.
That's a long time.
Yeah, especially in this market today.
This
week.
In this market today, yeah, that's a long time. So check this out there. And this NDX, this was screaming yesterday too. You want to see something? Just look at this. If I put the Qs,
a big move.
If I put the Qs up, so the Qs not only are down, they took all of yesterday's gain back. But you can see yesterday they couldn't handle.
And that is a pretty cool how you have, you know, this that's the 8th, which then is completely engulfed by the 9th, right?
That's,
which is then completely engulfed the other way by the 10th.
Right.
Yeah.
Now, and this, what's cool here, folks, is this. If you, let me just refresh this with one of the tigers.
Sure.
If you are into candlestick charting, what you also have here, this is where you got, you got a bearish engulfing, okay, in a big way. But what you also have is that, see, when you come across here, everything lays out right from that September 9th time frame.
Sure.
That September 9th time frame, folks, is one big monster. And whoever is selling that, they just continue to sell that level. See, you get September 9th, then I think it's October 10th, October 11th, same, coming off the highs again. And then, and this one is subtle, but see how the volume went up on October 28th? You didn't, the price didn't get destructed there, but the volume, you can see someone just keep feeding into it.
Sure.
And I was talking about yesterday afternoon that, when you can't reach a swing point, it's a problem.
Sure.
It's because that's where markets talk, walk, and squawk. Because who would ever think that, number one, you could be down 600 Dow points, you come all the way back, and you go up 150. No, you go up 300 Dow points.
I think we're down more than 600 too.
Yeah,
I know you're just being like, tight on the conservative, but right. No, I agree. Right.
Yeah, and then what ends up happening is that you go to the highs today, people buy, and you fail. You fail right across all of them.
And it's like all the tech stocks that are failing in terms of like the juggernauts of what has been the earnings and the market. Yeah.
We have a question in the den about the TLT bouncing, and listen, if the market is going south, which is going to, it looks like it's going south, these yields will turn right around again. That's the bottom line, because guess what? I was listening to this morning, so the bond yield, the bond move yesterday, folks, and, when Daryl's on with us on Mondays and Fridays, we talk about the deviation levels. There was a 3 deviation move in the bond market.
Yeah, you don't get those types of market action, as we all know, for sure.
So the TLT, the TLT, there's you're going to get, it's 124. This thing can, get to 125.15 in a heartbeat. It can go all the way up to actually 126.84. It just depends on the velocity of the move. What you want to wrap your head around here is this, is that we have 2 high volume swing lows. June 24th to 27th, and then the prior night. They're going to get tested, and so we'll find out. Is this going to be the fast and furious move down into those levels? And the way the NQs are trading, look at this.
Oh man, yeah.
So the NQs, they're down 86.
It's approaching 2%.
Yeah,
it's not a small number, so especially at 10:30.
The low of the NQs in the middle of the at midnight was 45.58. Okay, well guess what? We're halfway there now compared to where we were this morning. We were up at 48.79. Yeah, we've already given up 150 points. Is that right? Yeah. The high this morning was 48.
I had to process it myself.
Yeah, we've given up 150 points already.
Right, and now we're about 175 away from the low or so, almost halfway, right? Yeah.
Wow.
And what's remarkable is that halfway is 3%. So you're talking about we're like down 6% all the way back up. Now we're down 3%. So if you take like the 6% down, 6% up, 3% down, you're talking about 15 points in swing in like 36 hours.
Welcome to the brave new world, folks.
15 points of swing in an enormous index.
Right.
In 36 hours.
Right. And the Dow Industrials are going to fail right now, too. So you get the Dow, Dow.
They're only up 70 at this point. Right?
Yeah, the Dow Industrials right now, you're at 18,658, and you get a close.
It's 110. Sorry, I was just going to say it's 110 points off its high.
Right.
Which
and
is
if you close under 18,668, you get a failure.
Seems like there should be a little bit more hesitation in this market, right?
Oh,
it seems like it.
The sad part is that when you have spikes like this, people get in, think it's going to go a lot higher, and then all of a sudden it fails.
Got to examine things from a risk-reward perspective, and it's really tough to imagine with the unknown that wouldn't just bring a little bit more fear for the foreseeable, for like the next year, even. I just don't. It's not even based off anything. It's just based off like the unknown, which we all agree the market's should be wary of. It usually is, at least. See what happens.
So in between us just talking about the NASDAQ, the NDX, guess what? The NDX just went down another
20 points, right?
Yeah.
25 points.
In a
almost.
heartbeat.
Yeah.
Okay.
Let's jump through like Facebook, Amazon. Because that's got to be what's making this happen.
Oh my God! Look at this. Facebook's down 6.5, or 7 now. Amazon.
Talking about that's a 6% move.
Yeah. Amazon is down 38 and 30.
40. I think that was down 25 when we were going through it with Kevin.
Yeah.
20 minutes ago. Yeah, I mean, NetEase is down almost 9% approaching.
Yeah.
That was...
It's down $21. Look at that. These are heavy moves, man. And they get volume behind them. The door is never big enough when people want out of the market. Dow right now is up 73. You get the NASDAQ down 81. S&Ps are off 9.5. Stay right there, folks. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 96. You get the NASDAQ down 86.
NASDAQ 100?
114.
It's just down like 122.
I know. So let's go to the composite for a second. So if you look at the composite, look at that move, man. Holy cow. That is a move. So
I'm surprised some of this fear wasn't in the market yesterday.
Yeah.
Right? Or whatever it is wasn't in the market yesterday.
Oh, yeah.
I'm not surprised it's volatility, but Go ahead. Sorry.
No, just listen.
I think that's why everybody was so surprised that everyone went so high up, because you at least saw the potential for this, right? Right? I mean, that was the argument.
I agree. You know what is?
I know you do. I'm just talking.
I have seen this so many times, but it always blows my mind that you can have these types of moves. Okay, but what I've always, it's seeing a few cycles and then seeing these high volume spike lows and these high volume spike highs. And it's like, I have no idea. I mean, how does the market, just as you said, go so dramatically high, but it likes to do it. It's so weird, man. I mean, it really does. And before this...
Can't argue with the reality of what we saw yesterday, today, overnight.
And what does happen, folks, is this, which is a mind blower. Before that there's large downdrafts in the market, normally it spikes higher first. You see when I put the newsletter this morning?
Anybody that's looked at even charts, that there's always some exuberant last hurrah where it's like all of a sudden out of nowhere, right? Everyone's like so jubilant, and then something happens, and then before you know it, you're talking about whatever, about the market declining X%, so many days, etc. We've heard,
And what it is that it's someone selling the market. And you know, if you look at these, especially the S&Ps and the NASDAQ, it's not necessarily the same person, but going right across that line, every single time it's up to it, someone's throwing huge amounts of stock at that market.
Got to have buyers and sellers for that type of volume to move. I mean, once you have that much of a surplus on one side or the other, it's what moves these things.
It moves them.
Yeah.
Let's go take a look and see what the highest volumes are out here. Not that we have a high volume market out here today, but
I was like, show me, literally I was waiting for
Facebook's #1.
Yeah, Facebook, Apple,
Microsoft, Advanced Micron Technology, rather.
Tech,
Yahoo, Qualcomm, Netflix. Look at this, man. Amazon's getting toasted. Let's go look at Amazon. AMZN. It's like, what, is Amazon not going to sell anything anymore? Look at this.
Yeah, I know, right.
You know, this is pretty wild. So Amazon...
Maybe there's antitrust deals. You can go after them. I mean, I'm just,
Well, yeah.
I mean, it's all speculation, but it's down 5%, so somebody's speculating something big.
Oh, big time. And it's an ABC down. You got, it's blowing out a B point. Let me see. So A's 843. So it's a 90-point A to B, which gets you 680. No, that'll be 7.
Sorry, I was reading the Danas.
No, 700. 700 would be the price target on an ABC down. And you hit 717.
And the day is young.
The day is young. See, you know what's hanging out here? Now, this is another indication that the June 24th to the 27th, it wants to get hit.
We're right there, too.
Yeah, and on Amazon, you're here.
That's right. We're right there.
The 722 was the 23rd, and it hit 717. That's just another indication, folks, that this market is going to go there. And if this market goes here, so check this out. This is where this gets really wild. On the NDX, as to how far this number is down, we're still at 115. On the Qs, the top of that number is 108.
And that's right before Brexit, right?
It is. It is that Brexit day. That's what happened. The 23rd. It happened the 24th.
Sure.
But what you're going to see is that there's many, many stocks that are already there.
Sure.
Now, if we get the big dogs, if we get Amazon running down there, it's like, oh, really? So they
won't take many of these days to make it down to that level.
Oh, my God.
Yeah.
I'm telling you, man. So, bottom line is that, keep your stops in.
Yeah.
Trade both sides of the market, because that's what you're going to get. Oh, we get a call.
We have a caller. Who do we have? Marie from Erie.
Hi, Marie. How are you?
Good morning.
How you doing?
Happy birthday.
I'm
late. Was it yesterday?
It was yesterday. Thank you so much. And it's the Marine Corps birthday today, so I got it made. It's my birthday today.
Perfect, man.
And you're 39, is that right?
Totally. Exactly. Thank you.
I'm 39, too.
I like it. That's a beautiful thing. That's right. It's a head game. There's no doubt about it.
Yeah, we can't explain how Tommy's there, but, I mean... I was wondering if you could take a look at PayPal.
Absolutely.
I was wondering if this was the test and maybe it's a buy, but...
Let's take a look. So you get PayPal. PayPal, of course, is we all know what PayPal is. It's down $1 right now. I see. Interesting. Okay.
I'm guessing this is just a straight out. I mean, if Amazon, Facebook, and Apple,
right,
you know, they're web processing. If I'm just jumping, but yeah, you know, that's definitely somewhere in there for sure about what's happening today. But go ahead.
And this is a good looking stock. Okay, hold on. Let me. So if we, this is an ABC up. 1 second. So we got 34, 41. Oh, it's $6.
$7.
Okay, so yeah, it already hit it. I see what happened. So Marie, it was a confirmed ABC up like the 44, 45, but it actually hit it.
All right.
So I can see what you're looking at. Like if I didn't think, I personally think that we just topped out today and we're going to go a lot lower. And if I didn't think that, I'd say to you, yeah, I think that's a pretty good buy right here. And you know, you could go back up to 44.24, which is 10%. I mean, if you're trading it, that's one thing. That's, you know.
Yeah, I would be careful with what's going on in the NASDAQ 100 today with PayPal and just in general.
Okay, yeah. It's just a bit too risky right now.
It is, you know, because these are.
I hate to laugh, but just because.
Oh, this is a major failure out here.
There's a lot that could happen,
you know,
and it is early. We've seen, you know, just like we just saw a 15% swing in 3 ways in 36 hours.
Right.
You know, there could be 3% swings left and right.
Right.
For the next foreseeable future.
And the weighting structure. So this is what ends up happening, folks. If there's if there's more selling that has to be done. So picture that PayPal looks really good. I think it looks really good. Okay. Now picture we get a portfolio, and inside that portfolio, you know, most of these portfolios are pretty large, right? Well, if the portfolio is getting smoked on all these other ones, right, what ends up happening, that manager's going to look and say, oh, there's a winner, I got to sell it.
Yeah, there's just going to be volatility everywhere because of
they got to sell some of their winners before their losers. And I know that sounds like, oh, that's crazy. Well, guess what? Everyone does it.
Doesn't sound crazy at all.
And people say, oh, that's what they do.
They do.
They do.
But then guess what? If you're selling a good stock, right, like PayPal, other people are going to come in, create a new position in there because it's going to be undervalued if they are an actually stock that's going to report good earnings, and then that's going to swing up. But that's going to add to volatility there because then they'll take their profits when they get the
right. But that's going to be after the downdraft because once that door opens.
Well, that's the battle of buying and selling.
It is. You know, people back off. You know, so.
Can I ask you another one?
Yeah.
Kraft Heinz.
That's KFT, I think, right?
KHC.
KHC?
Yeah.
Okay. Okay, so, yeah, you stay right there. Don't touch this one yet. Because, see, Mondelez is getting hit this morning, too. Yeah. And that was a spin-off of this company. No, don't touch this, Marie.
Okay.
Yeah, you can look at this like it's $77. You're at 81 right now.
Okay, sounds good.
Okay, have a great one. Have a safe one.
I think that might be a little Procter & Gamble action there too, right? Having all those products.
Yeah, big time.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And if we do take a look...
Man, we take our eye off natural gas for 10 minutes just because the NASDAQ's jumping around by a few percentage points, and look what happens.
Right.
Not a huge move, but... So let's walk through what we did, right? So at the last break, I think it was, this was starting to drive down to about 258, getting slightly below it. And so, again, you had about 3.5 pennies, right, to your break even. So that brings it down to...
256.50, I think.
5, exactly, right about here. So you can see just visually we're approaching that level.
Right.
So we said maybe you should put in an offer to get your money back at 260, 256.5.
That's right.
And then
if we got a spike higher,
maybe we can get a spike up, and that way, because you can't. Maybe you don't expect a huge cascade off that news.
Right.
So maybe you just get some oscillation, you get your money back, and then you have the two positive ones, and if it climbs anywhere above 260, you take profit to the upside. We set that trade. We had our last segment. We peaked back, and man, what a rise. Unfortunately, it didn't quite get to that level, so you still have both. And now to the upside, we decided, you put in an order to the upside. If we'd had that order in, you could have taken your profit, but again, this could have shot up even more.
And I still get to noon too.
And that's just good action to see no matter what.
It is.
With a full hour. But yeah, so now you have two open orders, and we'll go to our working orders, and that's where you can see. So one of them's at 263.5.
Yep.
And that'll get your money to the positive side, and then you'd have, basically, you'd want to swing back to the negative. And same thing, 3.5 pennies to the downside for the 240 to 260 spread.
I like it. When these line up at those levels.
If neither get executed, right, and it expires where it's at right now, you get $24 of value back when the whole trade was 35.
Okay.
So that's a good deal.
I'll take that.
Yeah.
I'll take that. The market, you get a nice market out here. I mean, well,
is that an understatement? No, I'm saying for trading. No, right. I'd say it's an extraordinary market, really. When you're talking about from a trader's perspective.
It is.
I know you are.
There's no doubt. And if we take a look at, so what you're going to have out here today, I believe, 446. Yeah, you haven't reached a high. You're gonna, let me look at the IWM, because the Russell folks peaked out over a year and a half ago. I just want to see if it actually hit it. RUT. Let me actually bring
this
up.
will be really interesting to see how the difference between the Russell, the S&P, the Dow, the NASDAQ.
Look at the Russell give it up, man. So the Russell didn't hit a high again. Man, did it give it up. 1254 and we're 1234. Look at this. Now watch this. If we bring this back, you're going to see something that's just really wild. Look at this. The Russell, I think it's June of 2015.
Yeah.
Yeah, June of 2015.
Yeah.
So now what you have is that now you have another lower high.
Sure.
And that's dangerous, man.
It'll be interesting to see. We were just even talking about during the break, right? We were like, who gets hit hard if there's new tariffs put, right? We're saying maybe it's companies who are producing overseas, China factories, just to exaggerate, or whatever it is, and then you're bringing it into the U.S. So now the mantra's been protect U.S. jobs, right?
Right.
Trade agreements. So you'd have to protect against those imports coming in super cheap, which would then, kill U.S. manufacturing to compete with it. So then there's going to be taxes on companies that have all these factories overseas trying to sell to Americans that love spending money on retail, whatever it is. So that's where you figure out, and fundamentally there's some really smart people, trying to pour through everything right now for the opportunities that must be out there with the risk profiles that are present.
And we're going to see, what's going to be amazing out here today is that I suspect we're going to see the actual Dow go into the negative too. And right now you're up 76 bucks. We hit a high of 18,769. Hey, stay right there. Our man, Mr. Basil Chapman's coming up next. He'll be growling and prowling with you.
That's for sure.
Then swim lessons, Steve Rhodes, Dave White, myself, Thursday, Andy.
That's right.
Oh, baby. Hold on.
You're going to have your man Chris Gaffney on 4:15 today talking Everbank World Markets, those rates, baby.
Perfect.
Okay.
Have a great one, folks. Have a safe one. Thanks, pal. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.